Hello viewers. Now the Kagi chart might appear pure madness to some of you, but it is a chart type growing massively in popularity, really effective across all different types of markets. It's readily available for anybody these days on any charting software package. It might seem confusing to start with. Now I've solved that problem for you as well. Coming up on your screen now is a video short course on my YouTube channel that you should work your way through, especially if you're interested in maximizing the benefit of this video. I'll put a link to that in the description below this, and also towards the end of this video as a link as well. So after you've gone through that, or you might be familiar with Kagi charts anyway, jump into this video and I'm going to give you 8 strategies. They're going to be broken down into their component parts for you. I'm going to analyze take profit levels, stop loss levels, going to give you the whole gamut in there so you can take away these and put them into your trading. You're going to test them out, try them out, do your own due diligence of them, and then hopefully you can use Kagi charts to great effect. I'm also going to show you what are the best markets to trade these strategies on as well. So a whole load to get through. So let's get started. Firstly, a bit of background before we dive into the 8 strategy setups. I've found that these 10, they're my top 10 for Kagi chart strategies in terms of markets. As you can see there, good spread. Currencies, Euro USD, USD JPY, some cryptos, Bitcoin, Ethereum, some stock market indices, S&P 500, Nasdaq 100. Then we got gold and crude oil as commodities, and a couple of stocks there, Apple and Tesla. So if you want to start anywhere in the world of Kagi trading, you can always start there. You've probably got your own favorites, but they're 10 that I like to use. And a bit about the general box size, reversal size methodology I've used here. So for Forex instruments, I'm using a 20 ATR. Commodities also using a 20 ATR. Indices 25 ATR, and cryptocurrencies a 30 ATR. And one last point, in the 8 strategy setups you're about to see, I focused more on the long side to the strategies. All of them can be to the short side as well, and you'll notice that I've put in the long entry exit rules, etc. in there. Just flip them round to the short side. It works exactly the same way but in reverse, so just do the flip of those rules if you want to go short the trade. So don't think I'm leaving out the short trades, I'm not. You just do the reverse of the setup and you should be good to go. So let's get into the 8. So first up, we've got a sort of reversion strategy here. It's the Bollinger Bands plus stochastic plus ADX. Now go to the chart here, you can see I've got it on the Nasdaq 100. That's one of the best markets to trade this strategy on, and I'm using there a 25 period ATR, giving a 50 reversal block size. Call it what you want. We can just drill into that and click on to there. You can see the ATR 25, that gives us that block size. You might, if you want to set rules around this, change that to a fixed 50 after you've worked out what the number is by just doing there. So then, you know, if you're using TradingView, if you just leave it as ATR, it won't allow you to put alerts on there, but if you fix it, then it will. And if you're going to do that, maybe review what the number is, you know, weekly or monthly. And this strategy, like I say, sort of a reversion strategy. We've got down the bottom a ATR, and that is for our stop loss that I'll talk about soon. Then we got the ADX, and there's a click on there, settings, standard 14. Then we've got the stochastic above that. Now you can use different ones here. You can use like 5320, which I use commonly on my Renko charts, you could use something like 1433 as well if you like. Let's use that as the default in this one. Actually, I'm going to go back to the, I like the 5320. It's one of my favorites there. Right, so oh yeah, can't forget the Bollinger Bands, just standard 22.0, nothing exciting there. Like I said, we've got the Nasdaq here, 50 block size. What are the rules? So getting into a trade, so we've got to look for a bullish reversal, an upward move. So let's just look for that. We've got one going on here in this example. Now these examples are made more clear cut so you can see them easily in your, when you're watching this video, but you've got to spend the time and effort learning these setups and recognizing when things are happening. But let's get back to the long entry. Let's go along. We've got long coming here. Now we're looking for the stochastic to cross up. Now you can either take it through the 20 or as it crosses the D line there, and as it adds the percentage D, so we can see that there we've got this turning from the red to the green. So red I'm using as bearish, green bullish. Some have it as thin and thick lines there, yin yang lines, but I've got it as red and green just to make it more obvious. And we've got this reversal point happening in here. What other things do we need to know? Well, we then, if we got that ticked, it's crossing, we got the reversal, we go down to the ADX and we need it above 25, and at the moment that's very high, as that crosses at 66. Above 25 for both long and short trades, that is we're looking for, because that's signifying or confirming the strength of the trend. So we've looked into that, and then the last piece of the jigsaw is the Bollinger Band. We want the price at or near, in this instance, the lower end of the Bollinger Band, because we want the price to reverse, back towards the other side of the band. Now it's vice versa for the short entry. How do we get out of the trade to the long side? Well, we've got a few choices. We can do it when the stochastic crosses back over. We can do it if the Bollinger Band touches the other side, or if the ADX starts to drop down below the 25 level. So they're the three exit points of the trade. Now the stop loss here, you've got various approaches. You could take ranges like from Fibonacci lines if you wanted to, but I like to keep it sort of as systematic as possible. And we've got an ATR here, and you can take 1.5, 2 times the ATR and put it under the entry point. Or you want to be really aggressive, you could, I suppose, come in where that reversal occurred, the low there, get in there for a real tight entry point, stop loss point, and then ride it up. So in terms of actual backtest results, so this strategy on the Nasdaq wins about 67% of the time. I just ran it over the whole of 2023 and up to today. Average profit per trade 4.2%, average loss per trade minus 2.1%, net profit 45%, max drawdown 7.2%. There's about 110 trades in there. Profit factor 2.1. So strategy number 2, it's on the Euro US dollar. Use a ATR of 20 here. Same as our previous strategy, I'd then convert that into a fixed amount so I could add signals on, but that gives us a block size of 0.0002 on the chart. Now what's different about this strategy? Well, it utilizes the power of the Ichimoku setup, but we've also got the ADX with the usual settings there. That was 14. At the bottom we've got the ATR set to 14 as well. Now the Ichimoku setup is as it is traditionally, nothing new there. So what about getting into the trade? Well, first up we're looking for a breakup for long trades, we're going to focus on here. It's vice versa for the short ones. And we've got this signal here. The price is broken up through cloud. It's moved from red to green. We're not going to take that trade. Why? Because it's broken this ADX rule here. It's got to be over 25. That's both for long and short trades, and that doesn't happen till around about somewhere here. So we ignore that trade. We also need the Tenkan Sen and the to be above the Kagi Sen, which it crossed here, so that's good anyway. So, and we also need the Chiku span to be above the price. That's like a trend filter. If it's above, it's bullish, and as you can see over here, it's below bearish. So we almost got in on this trade, and where we could have put our stop, we could have maybe gone in under the cloud there, so we would have got away with it anyway, but that's not the point. So we actually wait for this next breakout. We still got our Tenkan Sen and Kagi Sen above, and we wait to the 25 and we get in somewhere around here. How do we get out the trade? Well, we can say if it reverses from green to red, or it crosses back through the Kagi Sen line there at the top, and we would get out anyway. So it's similar to the Kagi line reversing, or we could maybe do a fixed amount on the trade, you know, risk return, fixed risk return, maybe 1.5 to 1, something like that, depending where you've put the stop. But we also in this trade want this ATR picking up as well. So it's like a volatility gauge here. We want the pickup, so it's going to give us some oomph for our, you know, momentum in the trade as it goes on up. So that's another important factor to bear in mind. Now, like I said, stop loss, you know, you could take 1.5, 2 times the ATR. You could stick the, you know, as we got in this trade here, you could stick it under either of these moving averages, depending on how aggressive you want to be. You could put it at just under the cloud top there, or under the cloud bottom there. It's really down to your own personal preference. Most often I use an ATR stop on this type of trade. Now, in terms of the back test on here, about 4-year back test, did 68% win rate. There's about 150 trades. Average profit per trade 1.8%. Max drawdown quite a bit, 12%. Profit factor 1.75. We've got a few quick fire setups coming for you now. The first of which is one that combines the Bollinger Bands and the MACD. Now the settings, just traditional, don't worry about that. 22 there on the MACD, and on the MACD 12.26.9, just usual standard things, and the entry is really simple. So we were looking for a change from, say, for the bullish one, from red to green. So here we go, we got one down here, and we want the price to be touching or close to the Bollinger Band, which we've got here, and then we confirm by waiting through until the MACD crosses there, the signal lines, and that happens in there, which gives us our entry around about here. Now, how do we get out of the trade? Well, you could take it as it reverses back. That normally gets you out a bit choppy that way, or you could, when it touches the other side of the Bollinger Band like it does there, or when the MACD line crosses back over like there, which was the best trade in this example. And really that's all there is to it. You can set your stop loss below that turning point, or use, say, 1.5, 2 times ATR, which will probably be a bit more conservative, and take you down there. So in terms of results, this has got a 67% win rate. There is about 200 trades over a 4-year back test. Average profit per trade about 2.1%. Max drawdown 10%. Profit factor 1.8%. What I did fail to mention is I like to trade this one on the S&P 500, as you can see up there in the top left ticker, using ATR 25. Now I just want to run by an alternative setup here of this setup, and it's about the Bollinger Band. Now if you watch my Renko videos, I like this offset type functionality, and you could change it, say here, for breakouts above the Bollinger Bands, and use the MACD as the trend filter. So here we got a breakout here to the long side, and the MACD crosses, and we shoot on off up that way. How you get out the trade? Well, maybe coming back in here, then that's not a very good trade, but you re-enter back there, it's still bullish there, and maybe close out as it comes back in, maybe have a fixed return, risk reward return on there, up to you. But just something else to think about playing with, you know, adjust the Bollinger Band maybe to introduce an offset. So with number 4, we're sticking to the Bollinger Band, and this time we're sticking with the offset. And I'm going to quickly run you through this trade. We're looking for breakouts here, and in this example, long one, we've got a breakout here, and this time we've introduced volume at the bottom, and I'll put a 20 period moving average on the indicator there, as you can see, easy to add on. Now what we're looking for here is a spike in the volume on the Kagi line, and we can see that clearly playing out just here. You see it's gone up above the 20, it's broken up, and again we can run the trade all the way through till it comes back into the cloud. If you want to be more aggressive short term, maybe when it reverses from green to red, but you're going to get a lot more whipsaws there, so you want to try and keep in the trend as much as possible. In terms of statistics then, this trade wins about 64% of the time, average profit per trade 4.1%, max drawdown 7.2%, and it's had a net profit of about 38% over a year. And I've done this on Bitcoin because I want to show you a more volatile trade. ATR on that is 30 for cryptocurrencies. It's a very nice, simple, easy trade. So we've got another derivation here, one I quite like. It's replacing really the Bollinger Band with the super trend, and we've got the MACD at the bottom. Now settings are both standard. As you can see there, we got 10 ATR and 3 multiplier, and we've got the standard signal setting 12, 26, 9. Doing this on the Nasdaq 100, it likes it on there, this type of setup. ATR is 25, giving us a $50 block size. If you wanted to try maybe something really aggressive, you could take that down to say 10, 15, 20. Try it out, test it out, see what you get. But the rules of this one, very simple. Let's look into a long trade. It is literally, we're looking for the Kagi line to change from red to green, like we see here. We want the super trend to be in a buy situation, and we need the MACD line crossing above the signal line to confirm the bullish momentum, and that's what we have got. Now how do we get out of the trade? Well, for the long one we could look at the reversal of green to red. The super trend indicator, sorry, there changes to sell, which we haven't got yet, or the MACD line crosses back over, which happened here, which could have got you out somewhere around there. And it's vice versa for the short trades. Now what does that give you in terms of statistics results? Well, used a 4-year back test here, win rate 68%, 180 trades, 2.4% average profit per trade, max drawdown 9%, and a profit factor of 1.85. And 2 other points to make before moving on. In terms of stop loss, I would use the super trend for this. So where it breaks, that would be my stop loss, you know, there and there when you get that signal there, and then you could trail it up, maybe keep moving the stop tighter and tighter. So that is what I would do there. The other point to make is we might want to play around with the super trend variables there. If we click on them, we don't want to click on the brush there, we want to click on the super trend. There it is. Maybe play around with the ATR and period and multiply to give you some other results. Always test before committing funds. Now our sixth strategy setup involves two indicators that we haven't used so far. That's the parabolic SAR and the CCI indicators. Essentially we're using these two to pick up the trend and possible reversal points. Now I'm using the euro dollar on this setup. It's the ATR 20, giving us a block size of just under 1.5. Again, play around with the inputs there if you want to get different results. So how do we actually trade this? All very simple again. We're looking for the Kagi line for a long signal to turn from red to green, vice versa for the short. We want the parabolic SAR dots are below the price. So let's just hone in on the example here. So there's your long trade there below. We've got the switch there, and then we need the CCI crossing above plus 100 from below, indicating strong bullish momentum, which we get here. So we would get into the trade, and in terms of how long did that last, that trade, well, we got the 5th of August there, 3:45. And getting out, well, when the line reverses, as you see here, 3:45 to 4:11. So only a 20 odd minute trade there. Or you could do it when the parabolic switch, like there, or the CCI crosses below 100, which happened here, which is very similar to that switch there. So that's really it, and it's vice versa for the short trade. Stop loss, use ATR 1.5 2 times below the entry price. And in terms of backtest results, well, win rate 66%. Actually did this over about 5 years, this backtest. Number of trades 190. Average profit per trade 2.3%. Max drawdown 8%. Profit factor 1.9. So we're keeping the parabolic SAR in play for our 7th strategy, and what we're adding instead, we're now adding in a 50 period moving average, that yellow line, and the red and green ribbon, that's the Hull suite, and that's set to 55. So how do we trade this? Well, I'm using the S&P 500 25 ATR, giving us a $5 block size. Getting in, we want, say, let's for a long trade, Kagi lines changing from red to green, indicating a bullish reversal. Parabolic SAR dots have to be below the price. The Hull suite line is green, and the price is above the 50 period moving average. And in this example, we can see it nicely playing out there, above the moving average, above the dots, going from red to green, and above the ribbon. And getting out, well, we can do it when the line reverses from green to red, or when the parabolic switches like it does up here, or when the Hull suite turns like it does there. It's a nice, simple, effective strategy, this one. Stop loss ATR 1.5 2 times the where you got in at the entry price, below that. This backtest 5 years, win rate 67%, about 150 trades, average profit per trade 2.1%, max drawdown 9%, profit factor 1.75. Now our final 8th Kagi strategy setup, well, we've got ATR down the bottom there, 14 period. We've got the MACD crossover, usual settings, and we've got stochastic slightly different this time, 1433, and we've just got the standard Kagi. I'm using it on the NASDAQ, ATR 25, giving us a $50 block size. How do we get into these trades? pretty simple again as well. We're looking for MACD crossover there to the bullish side. We want the Kagi going from red to green, but we want here with this refined stochastic the percentage K crossing up through the D, which we've got one here. We did have one there, but obviously you can see that the red is above the green, so we wouldn't have taken that. The next time that happened was there. So we're getting into the trade around about there, and how we playing the trade from there. Well, getting out of it, I like to look for the cross of the MACD. The stochastic is a bit too juddery at these numbers for me. You could take a shorter trade there and get out somewhere there, which would have been not bad there. The MACD was about here and gets you out somewhere in that zone as well. So that's that set up. In terms of stop loss, again ATR 1.5 2 times, and backtest results. 5-year backtest, 67% win rate, 160 trades, 2.2% average profit per trade, max drawdown 10%, profit factor 1.8. So there you go, 8 different Kagi setups using a multitude of different indicators. All I suggest is that, you know, if you want to use any of these, you go away and test them yourselves, try them on different markets, on different block reversal sizes, and, you know, do thorough testing before you commit any cash to these types of trades. Let me know in the comments whether you trade Kagi, and also, you know, what strategies you've got going on there. Do you use any that you've seen today? What do you think of these strategies? If you do give them a go, let us know what goes on. And if you've liked today's video, please give us the thumbs up. Don't forget to hit the notification bell button to receive future content such as this. Now, right at the start, I mentioned that Kagi short course. If this video has whetted your appetite for learning more about Kagi, a link to that video is coming up right now.